What's up, everybody? Welcome back. Today I want to do another reactionary video, this time with Eric Johnston. He's the head of equity, derivatives, and cross-asset for Cantor Fitzgerald. Says Eric has over 20 years of experience in the financial industry where he has managed significant capital and risk. Let's see what he has to say.
Because I want you to listen to you, and I want our viewers to as well, just 10 days ago, September 22nd. Listen.
You know, our conviction at this level is as high as it was when we were 1,000 points higher when we were bearish at the beginning of the year, bearish at 4,300 and now at 3,780. If you ask me, based on this current information, where the S&P would be, I would tell you that we should be much lower. I'm very surprised that we have not sold off as yet, but I think it's coming. If you wait 6 months, I don't think you're going to be in your best case scenario. I think you're going to be where we are right now. And in what I think is the base case scenario is that we're much lower. The higher the market goes, the more aggressive the Fed is going to be. And the same token, the lower the market goes, the less aggressive they're going to be. But the bottom line is that it's a lose-lose situation. If we go higher, the Fed gets more aggressive. If we go lower, then obviously we're going lower, and it's not going to be profitable to own stocks.
So before we keep going with the video here, it's just interesting because all the analysts, pretty much everybody's so bearish. Everything is so bad, so negative. The market's been going down. Market went down like every week last month. It was like one of the worst months ever in the stock market. Anyway, let's see what he has to say now. We've had a green day today, so let's see what he says now.
All right. I feel like I should ask for your ID. I mean, are you the same guy? How does that guy who said all of that now say that you have turned tactically bullish for a 3-month trade?
So we're very bullish, and our conviction is very high. And so what has changed? So we look at the market very unemotionally, and we check our views every single day based on the information that's out there. And what we're seeing right now is the following: inflation, real time, is falling sharply.
I'm so ready for October 13th. That's when the CPI data comes out. So I recently did the PCE, but that was in August. So this will tell us what September happened. So October 13th, big day. We'll see. Hopefully it's come down a little bit. We'll see.
And I can run through all the different aspects of inflation, but every single data point in inflation is falling month over month.
Which it has been.
Yes. Now it's continued with rents, and with now homes are finally, home prices are finally, turning over. We think the Fed's last hike is going to be December 14th. And the reason why is part of the contagion that we've seen in the last week since I came on last time, I think is one of the 3 components that's going to lead to the Fed having their last hike beyond December 14th. So we're a mere 2 months away from this Fed hike cycle being over. And then the capitulation indicators have all shown up in the last 10 days, where you had the VIX hit 34, you've had the VIX curve invert, you've had the RSI go well below 30, and a number of others that all suggest that we are going to have a sharp bounce.
Let me take those one by one.
Sure.
So real quick, I wanted to define RSI. That's relative strength index. Basically, if that's under 30, that means the market could be potentially oversold. That's what he was talking about for RSI.
Sure.
If I may.
Sure.
Last time you were on, you said, and I quote, "The Fed stopping is not a reason to buy equities." Now part of your bullish thesis is on the Fed stopping. Square those 2 points.
Sure. So the market, there's sort of the medium term and there's the short term. When this market gets a whiff that the Fed is almost done, the first reaction is that we are going to have a sharp rally.
I totally agree with that. Once the market smells any type of relief from the Fed, either stopping to raise rates or even just going up even just 50 or 25 basis points rather than 75, and seeing inflation coming down, I think the market's going to start rallying from there as well.
Even though in the long term, we're going to have to live with 4.5% Fed funds rate or 4.25% Fed funds rate for a amount of time that overall is going to put a damper on the economy. But the first thing that the market's going to do is it's going to rally on that. And one of the things that I look back on is there's been 4 times when the CPI has gone above 6%. When it starts to fall, markets V-bottom every time. It happened in 1970, 1975, 1980, 1990, and these were V-bottoms. So the market is going to smell inflation is done, Fed is done, and the first reaction is going to be market rallies.
So that first thesis he has, that's showing if October 13th, when the inflation comes out, the CPI data, if that turns, then that thesis could be correct. We don't know that for sure, but just something, he's very adamant that that's going to be a lower CPI number.
You said capitulation is not close, right? When you were on last. We're only 70 points below that. The VIX was 34. I mean, it's not like that's not capitulation, right? You know that. I mean, 70 points from September 22nd when you were last on.
So a lot of people think capitulation with the VIX specifically. The VIX is the volatility index, the fear and greed index, however you want to look at it. The higher the VIX is, the more scared the market is. It has to do with futures. Anyway, I did a video, I'll link it up here, about the VIX. But a lot of people think the VIX is going to have to hit like 40 or 45 to signal the bottom of the market, and we'll see what he says about that.
Now we've reached capitulation?
Yes, so here's capitulation. 10-year yields hitting 4%. The British pound hitting 1.04. MBS spreads going to 85 basis points.
MBS is mortgage-backed securities.
And retail selling big in the month of September.
So retail just means basically individual investors, like not Wall Street money or hedge funds. That's like normal people. I just wanted to clarify that. I don't know how they measure that retail's been selling or buying. I'm not sure how they measure that exactly. It's hard to know if that's true. Anyway, that's what he's saying. We'll keep going.
And so as much as I thought the low in this market for this year was going to be lower than where we closed on Friday, I was looking at all the different data points, and I said, you know what, a lot has been thrown at this market. Ran through all the stuff that we just talked about, and the result is I don't think we go any lower this year. So that's where we stand.
If we could believe everything we saw on TV, man, sell everything you got, throw it in the NASDAQ or whatever high risk. But I'm not telling you guys to actually do that. Just this guy 10 days ago said the market's going down forever, and then now he's saying it's up. So this is part of why I say try not to buy into all the noise or the media. Hopefully he's right. We'd all like the market to go up, but just remember, I'm not a financial advisor, and this guy actually is one, I believe. So anyway, we'll just keep watching the video.
You had contended that there was better competition for stocks some 10 days ago, whether it was bonds or money markets, which finally offered an opportunity to investors that they hadn't for the better part of at least the last decade or so. That's changed?
So I think that trend is going to be here, where money is going to, big picture, be on the margin flowing into money markets. And that's part of what we saw when there was selling in September. However, I think right now we have a 10% move, maybe greater, between now and the end of the year. And
10% in the S&P.
In the S&P 500. We went bullish this morning, so we've gotten a couple percent already. But I think we have that kind of move, and that kind of 1 quarter move certainly dwarfs what you can get in money market funds. But
so something to remember, guys, whenever Wall Street starts pumping the stocks up, they probably actually will be buying stuff because what they say is going to eventually happen. So we just don't know when they might sell. Anyway, that's just something to think about. If all these people start getting real bullish, the market will probably be bullish for a while, and then all of a sudden it'll turn one day. So you gotta think he said all these things after the market had a bull day, and all that other stuff he was saying was after all this bear market. So anyway, just something to think about. Try not to get too much into the media, but we'll finish this video out here.
I'm not backing away from that longer term trend, which I do think will exist, which over time I think money will move out of equities, a portion of it, out of equities and into money market funds.
If you guys have liked today's video, if you're still with me, please consider subscribing, hit the like button down below, and comment on what you think is going to happen with the market. If you guys even watch any media stuff, if you think that has anything to do with what's actually going to happen, or if you think the opposite's true, sometimes maybe they're pumping something up to get all retail and then they sell, something like that. That's possible. Anyway, This is a picture I took of it's called a pink meanie. It's a type of jellyfish out here in the Gulf Coast of Florida. And anyway, I'm just going to share like a picture with every video because I'm actually a professional photographer. And anyway, I just think it's fun to share some photos. So I'll share probably mostly my dog, but hope you guys are having a great day, and I'll talk to you again later.